Hey, Tyler, thank you so much. And I don't think he can hear you, so I'll tell him to his face. Tyler says, don't be nervous for your first TV interview.
Yeah, that's good. Don't think of an elephant.
But it's a really great day to have you because in addition to being co-president, you're also in charge of Morgan Stanley's wealth management division, which really spans the gamut of investor types. You've got the self-directed market like E-Trade, Eaton Vance now, the old Smith Barney, now Morgan Stanley Wealth Management. So given today's sell-off and the overall volatility in the market, what is investor sentiment like right now?
Yeah, so, investor sentiment, what I would say is we're seeing the investor be very, very rational. Right? What you don't want is people to buy when they feel good and sell when they feel nervous. You want people to think right on through the cycle because cycles are part of what markets are. And if you think of what wealth management does, if you think about what an advisor does, an advisor what gets investors to think about their life goals. They get them to think about their lives, and they set them up such that they can achieve their life goals, and they don't have to worry when you have turbulence or when you have markets like these. So, in a day like today, where we're all watching the TV this morning for the CPI index to come out with bated breath in the morning, we don't want our clients doing that. We want our clients out enjoying their lives, and that's kind of what we're seeing. We're seeing that nobody likes to see red. There's a lot of engagement. There's a lot of phone calls to advisors, but we're seeing basically reason. We're seeing rational.
So you are getting a lot of inbound.
Yeah.
While your main focus is, this morning at the Barclays conference, you talked about net new assets at the firm, and you set a target that, may be responsible for helping provide somewhat of a floor to Morgan Stanley stock relative to your peers today, although, of course, everybody's kind of in the red today. You said that you intend to grow net new assets by $1 trillion every 3 years or so. Just to clarify that, does that come from organic growth? Does that come from acquisitions, which is, I mentioned in the previous question, you've had a lot of very successful acquisitions within wealth management.
Yeah, so through acquisitions, we've set ourselves up. We like to call ourselves a category of one. We look like nobody else. We grow like nobody else. We have a business like nobody else. And through the acquisitions, we've made ourselves a powerful player in all three channels, in the self-directed channel, in the workplace channel, and of course our bread and butter, which is the world-class advisors that we have. And that drives a lot of organic growth. So over the last 6 quarters, we've grown by $650 billion organically. And yeah, what I said is that you should expect us to grow by about $1 trillion every 3 years through net new assets. That's not counting the market. And the way we think about ourselves, we're a scaled player, and we're a growth company.
So, any acquisitions that you would like to see within that target?
Yeah, we got here through acquisitions. We're very good at acquisitions. We have when we do acquisitions, we look for good strategy. We look for great culture that would fit within our culture, and we're really disciplined about process and integration of our partners into the organization, so that to the client it looks like one integrated, one client experience, and that's basically what we've done. If there's other acquisitions that fit that mold, of course we would do them. One of the things that I talked a lot about this morning, which I think is really exciting, is what we want to do is we want to be really innovative on our platform. And what we're doing is we're going out and we're talking to fintech organizations or tech organizations that are very innovative. And what we want to do is become really good at integrating those technologies into our platform. And in that way, even if we don't do a whole company acquisition, we can really further our innovation.